Hey guys, welcome to another Trade Genius podcast. Got my good friend Bob Kudla here, and we are going to talk about all the chaos and madness that's going on. We got tariff wars and all this other stuff going on, headlines every other second. We're going to talk about all of that and what can we look forward to as we progress through 2025. Let's dive in.
Trade Genius.
Okay, Bob. So pretty wild volatility, pump and dump, gap down, trade wars, not trade wars, delayed trade wars. What's going on here?
Well, first of all, I think, Phil, we are Zen genius right now because we've been kind of following this, and we have some roadmaps to kind of help us in this environment. We guys told you after Trump's inauguration, things are going to get pretty wild. But what I want to do is I want to back that with some data, and also to just shout out, Jam Croissant. You can look him up. He looking at stuff from quant information, and it kind of dovetails with historic. So let's throw the historics up there, Phil. First is that if you look on that chart, is blue, red, and then there's a little yellow line at the bottom. So what you're seeing here is the blue line is all years what 2025 would look like, if it was an average year, okay? The red line is what typically happens after an election where you have a new party in power. And if you notice that it's a weaker than all average because, you basically it's a change agent. People change political parties because they were dissatisfied, and that political party is going to evoke some sort of change that will cause the markets to stumble. And then you see that very bottom one is yellow. That's the actual that we've insofar, and it's even been weaker still. And then, you're going to show a cool chart here in a second. So what we expect to happen, regardless of the madness, we expect this market to probably bottom out with the March OPEX and then have it grind up basically all through summer, maybe a little choppiness, and then we're going to get a dump in the fall, and then there's potential for it to rise again. That's the average. So it's just a good roadmap to know. And you guys got to realize February and March are typically weak months. Okay. April is the best month of the year for stock trading. And then depending on how the earnings reports goes, it could carry you guys into June, and then summers are flat. And then you have a fall sell-off, and then you have that grind into the end of the year. But I want to throw it back to you, Phil, because you have a really cool chart now that Trump is basically mirroring his first term with some of the policies that he's doing, albeit with a little bit more enthusiasm and control than the last time. So I'm going to throw it back to you. Show us this chart of 2018, Phil, and then let's talk about how it dovetails with today.
Yeah, let's take a look at this. So, this rewind back to 2018, and if you may or may not remember, there was the Chinese steel tariff issue, and the markets did not take kindly to that. It was the first time we had to deal with tariffs in a really long time. Initially, we had a big dump. Now, this is a daily chart, so we've kind of seen something similar, but really there was a bit of a waterfall for a few days, right? And then we bottomed off of that and we reversed. So we had, for the first few days it drops. Then we had one big green day, kind of similar to what we saw today with a bounce. Actually, I don't think even today registered as green. It was just we had a reversal intraday. But then we top out and we push back down and we make a new low. So this move down, even though it seems like we've had the 30-day reprieve and there's been some consolations from both Canada and Mexico in regards to like border security and things like that, this would imply that we're not out of the woods yet, because really what's changed, tariffs are still on the table, right? Trump's just bargaining for some help with policing the borders, which, okay, he's playing the chess game. But what if we're still going to deal with tariffs at the end of the day, then the market's going to be struggling to price that in, what that is actually, because we don't know. It's not clear. So market doesn't like uncertainty, and I would argue that things are uncertain at the moment. So we could continue to see this push down. And if we do, this is the 144 on the daily, I believe it is. And so we actually already had bounced off the 144 on the daily, and we'll look at our current price action. But the point is that when this flush was done in 2018, we had a pretty sharp reversal, taking us back up into February. As we got toward the end of February, we actually had another dumperoo, right? And then we got into another little push up, took out that high, and then the rest of March basically dumped. Because seasonally, March is problematic with markets. If you're going to pull back, March is definitely the time frame watching for that dump. So we just have to be cognizant that if we do hold the 144 again, that we may revisit it if we do get this similar type of bounce in March and pull back down. Okay. Then from there, I think the macroeconomic picture back in 2018 is a lot different than what we have now. Now we have joblessness is starting to creep up, initial claims starting to creep up. This was an environment where, the the job picture was much different. And I think that it was an improving job market. Unemployment was falling versus now where unemployment we're starting to creep up from, levels that we came down from. So it's different. I think the economy is slowing. We've had GDP expansion strictly because of mainly because of debt creation. So debt creation is going away. The Department of Government Efficiency, DOGE, is basically, cutting jobs effectively and cutting government spending effectively. So that's going to pull away from GDP. I know that sounds counterintuitive, but it's actually negative for GDP for those things to happen. So I think going forward, we're going to see what we've been expecting to see finally to come about. And then if Bessent, our new Treasury Secretary, Bob, if he's going to go heavy on the long end, right? Yellen was pumping T-bills. And if he's going to be like, well, the responsible thing to do would be like, well, we can't do that anymore because she just basically used up all of that ammunition. So he may go back to the long end. We won't know until Wednesday's announcement as far as the composition of the next quarterly refunding. But if it's all long end stuff, then the net liquidity that we count on to kind of help elevate this market will be going backwards. And then we're going to be in a scenario which is just like 2022. That's how 2022 started. The net liquidity fell off a cliff. And then we actually had put in a high right in January and then fell off. So it feels like 2022. Basically the trade wars chart is starting to look just like it did here at the beginning of this green shaded area. So we could have a further downside, and then we're going to have to see how things play out. But if the economy is different this time and rolls over, we may not get this move up over the 144 that we saw back in 2018, Bob.
Yeah, and Trump even said, he goes, look, the pain is going to be worth it. And so I just want to put some numbers to the unemployment. First of all, February unemployment, we're going to get an adjustment, okay? Because the birth death model has been skewed towards employment. That's already baked in the cake. Even before Trump, he can't deal with that, but he's not going to allow that crap to sit in there. He's going to do a washout. So February is going to have a little bit of that. March will probably have more of that. But more importantly, Phil, this blew me away with the DOGE reports is that 13% of our population is employed directly by the federal government in one way, shape, or form, which is not bad. I mean, it's amazing. It's probably too much anyway. But here's the one that blew me away. So you have 11% of the population. 11% of the population has been funded indirectly through these programs that they're cutting in the DOGE world that have been flowing into these NGOs that flow into these nonprofits. And everybody knows these nonprofits have been detrimental to our country. Well, he's cutting those off, Phil. So, I mean, we literally have 11% of our population are going to lose their jobs.
Right.
And at the same time, he's blowing people out of the country that have been working in this country, right? So we're going to have an unemployment kick from that. So he's basically doing a washout. He's doing what corporations do. He's just basically washing the balance sheet out.
Yep.
And then those people are going to have to look for work. And guess what? He's going to have jobs coming for him. It's just not going to be the cushy jobs that they wanted. These are going to be jobs where people actually have to work for a living. Albeit the pay is going to probably be good because there's going to be a lot more, there's going to be a fierce competition for labor, if you will. And you saw the UAW was overjoyed with Trump playing hardball with Canada and Mexico over autos. Mm-hmm. So it's going to be really interesting. He has to get all this out of the way in the next couple of months. But I think we're going to see some pretty horrific unemployment reports here over the next 6 to 9 months.
No, I totally agree. Bob, you wanted to point out something about the current price actions. I fast forwarded to the right of the chart to bring us to current.
Do you want to throw that up here? So what I've been playing with here, so 2 weeks in a row, just so you guys know, write this down. Here's a freebie from Trade Genius, is that it's a thing. You get a Friday down, a Monday, you get a Monday down, right? So we had that last week and we traded it. We had it this week and we traded it. What was unusual about today was we had a bit of an intraday reversal because of all the news action, but I think that's going to go with that QRA is going to be problematic, and Friday's employment report is going to be problematic. But there's a gap down there, Phil, that's down at 585 on SPY. And, in order for us to get any kind of movement higher, we're going to have to come down and fill that gap. And then I think we get another failure to launch. And then I have another, this is on ES. Then once that blows up, I'm looking at the chart. That's why I'm not looking at you guys. And I didn't give this to you, Phil. Then I think we can go all the way down to 54.27 on a measured move. And I think that washes us out for March. And that's kind of what I'm thinking. And Jam Croissant has said, if the Fed does not cooperate, and you heard Phil say earlier in his monologue, is that the Fed's not going to cut rates into a tariff war. That means Jam Croissant said the liquidity is going to dry up and it's going to cause the market some problems. So I think all that culminates into the end of March, and then liquidity is going to have to come in through some sort of rescue operation, and then we have to wait and see. Jam Croissant says, and we have data that shows that we could even actually make all-time highs between April and June before we get a hard roll-off into the fall. So I'm going to be open to it, but I'm pretty firm that I think we should be defensive into the end of March, Phil.
Yeah, I totally agree. Yeah, and so this white line here is a gap. Actually, I don't really see much in the way of gaps other than because we closed the gap today around 591.
Yep.
So SPY gap down here at 582.19.
Yep.
And then I think the previous month low, we could actually take that out, run some stops, maybe even get down to these lows at 567. But if we do get this move, we get a quick dip under that 144 again, and then we talk about that bounce up where we come up, and then end of March or beginning of March, we got to watch out and roll back over again. It's going to be very volatile. The headline risks are extremely high here. It's going to be a bucking bronco, but at the end of the day, like what we've been doing, where you got to just pick like the low hanging fruit when they come. And so these technical levels, are going to be the spots to go, and don't overtrade this environment, because you're probably going to get death by 1,000 razor cuts if you do.
Yeah, and if I can make one more point too, guys, look, if you get a gap, if you're short the market and you get a gap down, take profit right away.
Yeah.
Especially if you're doing puts and calls. Even if it doesn't go up at all, you're going to lose premium, because the first 15 minutes there's a lot of risk premium in there that you get paid on. If you ever watch your puts evaporate, even if price doesn't move in that first 5 or 10 minutes, that's why. So you got to hit it and quit it. Same with gap ups. And the other thing too, and I made this mistake a little bit today, is that you got to then let it breathe for a half hour to see if a quote unquote a news story comes in before if you wanted to double down on a price action. Because this is reminding me a lot of 2007 and 2008, Phil, where you get these movements that, okay, oh good, I got to short this market, and then they blow it higher. Like today, the people today are like, okay, all's clear, Trump got everything going again, and then they roll it over again tomorrow, because basically the big money now is playing you against their liquidity needs, and they're just going to bounce you around until they get themselves positioned again. And so you got to really, really just forget everything, and you just got to really take profit, see profit, take profit. Who cares if you miss some moves? It's just going to be that wild. And then I want to give you Bitcoin for the last, Phil, because Bitcoin had a really interesting day. When I woke up really early this morning, Bitcoin was down at 95,000, and it ended the day, I don't know if it got to 104 or not, but 101 or something like that. It was just an amazing stick save.
Yeah.
Bitcoin's at 101. Yeah. So there's a meeting tomorrow. I don't know if you're up to speed on that, the digital asset supremacy of the United States.
Yep.
And I don't know if people reacted to that.
Well, I think you had the initial reaction with the Mexico tariffs being delayed and everything surged. Then it was talking about a strategic or a sovereign wealth fund. And there was like, wink, wink, Bitcoin probably gets included in that. That's different than the narrative of the strategic digital asset reserve. So there's a lot of just headlines flying around and speculation, and there will be more clarity as the days go on here. But tomorrow they're going to talk about that strategic digital asset reserve, I believe. So we'll see what that is, what the clarity is on that. But yeah, Bitcoin definitely sniffing something out now. Could that be a sell the news if it's less than what the market's expecting? Possibly. So we'll have to see. But, I think when you have such a violent move down and back up, a lot of times if the market just doesn't take off from this, like you can see here, right? We just closed the daily candle on crypto because that happens at 7 p.m. Eastern. If you don't take off right away and start moving up, then sometimes if this dilly-dally is too long, what you'll end up doing is backfilling these hammers and these wicks, right? And so that's potentially what we could do. Even if we pulled back at this point, even if you went back to the previous week's low, which is down at 96, it would be a big move, but we're dealing with 6-figure Bitcoin now. So these moves, these ranges are becoming more normal. If you're getting $4,000, $5,000, $6,000 rotations, that's just normal. So we could easily go down there, test that previous weekly low, for example, and it's no harm, no foul. Hold this wick and start grinding back up. I think we're going to chop out here, Bob. The big question is, do we turn into this area? Does this consolidation turn into a coiling move and then we blast out of here for one final move higher and head toward those higher numbers? Or is it like when we hopped out in April, Coinbase IPO was a sell the news event. The high was the IPO day of Coinbase, much like the high of this move was the inauguration. And if that's the case, then we chop around this week. Maybe we push up to 104, 106. And then next week, if it's similar, we would roll off. So a lot of things are, hinging on this area resolving one way or the other. And there's big implications both ways.
Hey guys, stay tuned. Sorry for the long video, but I think it was important to get some of this data out to you guys. And I think it's going to be an active week for us. We'll try to post every day because there's actually real news instead of us searching for stuff for you. So stay tuned for that. Thanks for listening. If you want to check us out, tradelegitgenius.com. We think we have a pretty good sense of what's going on here, and we're trading it and we're making people money. And so check out our pricing and check out our deals and join us. I think you'll like what we do. Thanks, Phil.
See ya.
Trade Genius.